afternoon, everyone. I'm Namita Agarwal. I head the Municipal Revenue and Borrowings function at Janaagraha. I'm very happy to welcome you all to the 6th annual Conclave on setting urban agenda in India. And we are gathered here to talk about municipal finance today. We have two panels lined up. The first one will be on municipal borrowings, and the second one will be on fiscal decentralization. We have esteemed panelists for both of the panels today, and an equally esteemed set of audience participating today. We have representation both from the union government as well as the state government. We have representation from the market in terms of investors. We also have stock exchanges. We have representation from multilaterals and bilaterals. We have World Bank, IFC, FCDO, GIZ, USAID, etc. We also have government institutions like the market regulator, SEBI. We have development finance institutions. We also have philanthropic organizations. We have civil society organizations, sector experts, and academia present here with us today. I think to take the agendas that we discuss today forward, we really need long-term partnerships between all the stakeholders who are present in the room. And I think with this audience, we can really be hopeful that the discussions that we have today will lead to some specific takeaways and actionable next steps for us to take forward. So before we begin, I'd like to just call out a few requests. I request all of you to please either switch off your phone or keep your phones on silent. If you have any emergency or any unavoidable calls you'd like to take, I request you to please step outside the room. We have two panels today, as I said earlier. One is on municipal borrowings that has already started, 2 to 3:30 p.m. And the second one is on fiscal decentralization, 3:30 to 4:45. As both the panels are back-to-back and we don't have any gap in between, so I request all of you to please stay seated till 4:45 p.m. Now let's begin with the context for the first panel on municipal borrowings. India's cities need investments to the tune of 31 lakh crores to meet its urban infrastructure expenditure requirements in the next 7 years. For municipalities to meet this financing gap, they need to start looking and acting beyond own revenues and intergovernmental fiscal transfers. Globally, long-term debt, especially municipal bonds, has been used as a viable mechanism for financing urban infrastructure, whether it be in emergent economies as well as in developed economies. This trend is also picking up in India. We have had a slew of municipal bond issuances in the recent past. Even the capital markets regulator, SEBI, has been seeing potential in the municipal bond market and has been leading the way on strengthening and broadening the municipal bond market in India. They issued the ILDM regulations in 2015. These regulations have provided greater flexibility to municipalities for them to be able to raise municipal bonds, and they have also strengthened the provisions for protection of investors' interests. 56% of the total issuances that have taken place have been done post-2015 to the tune of about 2,500 crores. And out of these issuances, they were done by 11 ULBs. Out of the 11 urban local bodies, 6 urban local bodies were actually first-time issuers. Indore, which recently was successful in launching a public issue, had participation of retail investors as well. This was the first public issue for municipal bonds. It was also, incidentally, the first green municipal bond issuance. The current financial year is likely to see further many more municipal bond issuances, especially from cities in UP, in Gujarat, in Madhya Pradesh, and in Telangana. The incentives given by the union government through Atmanirbhar Abhiyan, through Amrut 2.0, and recently through the Special Assistance Scheme on Capital Investments have been fueling this trend. Financial reporting, which is a really critical stepping stone for making cities fiscally to strengthen their fiscal positions, has been improving, has seen significant improvement. In fact, 15th Finance Commission's mandate on publishing of annual audited accounts has seen to that, And City Finance, which is the flagship portal of Ministry of Housing and Urban Affairs, has been at the center of this unprecedented change. Today, City Finance hosts about 10,800 financial statements of about 3,500 ULBs in digitized, in comparable, and in standardized formats. These developments, whether they be in terms of issuances or in terms of financial reporting, have actually just pushed us in a direction which is positive, but it's still a very, very small drop in the ocean. There's a lot to be done. Enough liquidity exists in the Indian capital market, with assets under management of pension funds and insurance funds standing to the tune of about 62 lakh crores. This capital is just waiting to be unlocked. While a lot of the conversations around municipal borrowing center around municipal bonds, but we truly believe that the pathway to municipal bonds is through municipal borrowings. We really need to help cities to start looking at long-term debt, whether it be through term loans or any other kind of non-recourse project financing options. There is need for a sustainable municipal borrowing market in India, which is based on strong, solid market fundamentals. While long-term reforms to improve the fiscal health of municipalities are critical, but they have long gestation periods, and they require sustained political will in order to see the light of the day. To break this logjam, I think specific market-building reforms are required to prepare city agencies in order to be able to leverage debt and build investor confidence as credible borrowers. With this context, we have two objectives from the first panel on municipal borrowings. The first is to discuss short-term market-shaping interventions to bring in more cities into the borrowing fold and catalyze the next 10,000 crores municipal bond issuances in next 1 to 2 years. The second objective that we have is to identify the specific long-term policy interventions that need to be acted on now so that we can unlock private capital and lead the way to a 1 lakh crore municipal borrowing market. I now request the esteemed panel to please take the stage for the discussion. This panel needs no introduction. We have Mr. Jayant Sinha with us today, who is a Member of Parliament and Chairperson Parliamentary Standing Committee on Finance. He will also be chairing the panel. We have Mr. Pramod Rao, Executive Director, Securities Exchange Board of India. He's a panelist here with us, and he'll also be moderating the discussion. We have Mr. Vikas Gupta, Commissioner and Secretary, Urban Local Bodies, Government of Haryana, and the Member Secretary of 6th State Finance Commission, Haryana. We have Dr. T.K. Sreedevi, Secretary, Finance Department, Telangana. She was also the former Commissioner and Director of Municipal Administration in the Government of Telangana. Finally, we have Mr. Arnab Choudhury, Executive Vice President and Group Head, Debt Capital Markets, SBICAP. We will begin with opening remarks from the chair, Mr. Sinha, and I hope Mr. Sinha will also be laying out the expectations for the panel, followed by opening remarks from all the panelists, and then Mr. Rao will be taking the discussion forward. Thank you so much. Over to you, sir.
Thank you very much, and let me start by thanking Janaagraha, the Rainmatter Foundation, and everybody else that's put together this outstanding conference, and particularly this panel on city finance. So this is, as you pointed out in your introductory remarks, a much needed intervention as far as India's urban agenda is concerned. And as we all know, it's really the golden rule, which is he who has the gold rules. So unless we get the finance right, we will not have the golden rule applying to the urban agenda. So once again, congratulations for putting together a wonderful conference and for really putting together a very important panel on how we can bring financing to our cities. Now let me offer a few reflections. And these reflections are based on part on my own experience as a private sector person, as an investor, chairman of the Finance Committee in Parliament. So I'll offer some reflections based on those experiences. And I'll group my reflections in three parts. The first I will talk about is public finance and how difficult it is to get financing for cities because of the way our public finance system is set up. Second, I'm going to talk about how we need to think about city finance, my own perspective on that, much more as cities as economic engines rather than as revenue generators. So that's my second perspective. And the third I'll talk about is innovative policy interventions, and I'm very glad that we have practitioners on the panel today. And my expectation is that from the practitioners, we will get solutions, innovative solutions as to how we can address some of these gaps. So those are the three parts that I want to touch on. I know I have 10 minutes, so I'll go through it relatively quickly. First, let me talk about our public finance system and offer some experiences that I've had. We have a public finance system that's largely driven by the annual budget cycle. But that's not the financing need that our cities, our states, and our central government have. Much of our financing requirement is for capital assets, long-term assets that require long-term financing, not financing through the budgetary cycle. And I'll give you a very specific example. So when I was the Minister of State for Finance, the Education Minister, who at that time was Srimati Smriti Irani ji, came to me. And she said that she was finding it very difficult through the budgetary cycle to get resources for our higher education institutions to invest in capital assets like laboratories, like hostels, like new campus buildings. And she gave me specifically the example of the IITs that had significant demands for capital assets, but they couldn't get it financed through the central budget. Now, obviously, being an IIT Delhi student myself, I was very sensitive to the needs of our higher education institutions and their financing requirements. And we soon realized that there was simply no space in the central budget to fund capital assets, that a single hostel could cost you 200, 300 crores, a campus building could cost you 400, 500 crores, and that could not be funded through the budget because the budget is very tight when it comes to allocations to any ministry. And this was a classic example of where public finance has to fund capital assets, but what our system knows is basically the budget. That's the only financing instrument that we are familiar with, and that is the tried and tested mechanism that we go to whenever we need to do financing. Now, if we have to enable our cities, if we have to enable them to get the infrastructure that will make them really wonderful places to live in and make them competitive economic engines, we have to make a lot of capital investments. But our budgetary cycle is not the place where you should make those financing investments. They have to come from some other mechanism. Now, in the case of our higher education institutions, we then created a financing agency called the Higher Education Financing Agency. We capitalized that with an intervention in the budget with just 10,000 crores, which was obviously a drawdown depending on how the loan book got built up. And if you Google HEFA right now, Higher Education Financing Agency, I think the last I looked at was that it has a loan book of almost 50,000 crores. 50,000 crores. And it has enough capacity, financing capacity, to get up to 1 lakh crores. So we have made 1 lakh crores available for our higher education financing financial institutions. And my joke to all my former IIT colleagues, Ajay is here also from IIT Bombay, if I remember right. My joke to all my fellow IITians is that I am the biggest donor to the IIT system. Because the IITs have benefited very greatly from taking the higher education institutions out of the budgetary cycle, which was a huge constraint in their growth, giving them access to long-term financing through the Higher Education Financing Agency, secured against their revenues, which are largely student and industry fees that they generate, and enabling them, therefore, to be able to access this kind of financing, which can then enable them to do the investments that are necessary in capital assets. So we have to get our very important engines of prosperity, which was what our higher education financing institutions are, which is what our cities are. And we have to give them the right kind of financing support. And no, I have a number of bureaucrats here, officials here. and I'll tell my officials, no, it's not going through the budget. That's not the answer. So that's my first reflection, which is we've got to rethink our public finance systems so that we can support these kinds of longer term investments in assets that are sorely required. That's point number one. Point number two, let's think about our cities as economic engines. Our cities are capable of making a lot of different kinds of very important economic activities possible. For instance, cities can set up areas where we can attract IT services companies, global capability centers, other kinds of global services that are really, really growing very quickly in India. If we can provide them the infrastructure, the services, all of those kinds of things, we can carve out an area of economic activity that is very, very attractive for these kinds of companies, and at the same time enables us to leverage the facilities of a large urban area, whether it's airports, whether it's connectivity, whether it's access to talent. That's what cities have to offer. Now, they can't necessarily offer that to all companies, but there are certain types of companies that are very, very attracted to these kinds of resources that our urban areas now have in abundance. So let's carve out these very, very high productivity, highly rewarding economic activities, and let's create for them those zones where they can prosper and flourish, and that then generates the revenue source where we can provide then the support for investing in capital assets. So we've got to think of our cities as economic engines. If you say that I want to finance a sewage treatment plant or a trash to energy plant, and I'm going to do that by asking everybody to pay 200, 500 rupees a month for trash collection, I'm sorry, that's politically not going to work very well. We have to start to think very differently about where the high productive economic activities are in a city. And we have to create catchment areas, we have to create zones where they can generate secured revenues against which we can do capital financing. So we really have to ask ourselves, where is it in a city, whether it's in retail areas, whether it is the areas around a university, whether it's in IT services parks, whether it's in manufacturing parks, where we have high productivity, high value economic activities, and that's what we have to monetize. Those are the revenue sources that we have to create, which can then finance capital assets. So please think of a city not in the traditional sense of, okay, how do I charge somebody for trash collection? How do I charge somebody for water, and therefore let me set up a water purification plant? Those are, from a political economy point of view, and I say this as an elected Lok Sabha member of Parliament, those are much, much more difficult to do. Collection is very hard. We are putting jal minars across the country. We are asking everyone कि आप जल cooperative करिए और 200 रुपए दीजिए महीने का, कोई collection नहीं हो रहा है. वो है ही नहीं हमारे पास वो. So we have to segregate those areas where people are willing to pay for the economic benefits that they're deriving, and those parts of our economy that are exposed to the global economy, where we are getting effectively paid in dollars, that's where we have high value, high productivity activities. Those are which the cities have to monetize, our urban areas have to monetize. So that's my second point. Let's think creatively about cities as economic engines. Let's segregate those areas, and let's find ways in which we can monetize those. Number three, and this is to the practitioners in the room, you have to come up with innovative solutions. And we have in our country now over the last decade, example after example of very innovative solutions that we have unlocked and that have resulted in massive growth in economic activities. I have already given you the example of the Higher Education Financing Agency that has had a massive quantum jump in investment in our higher education institutions. I said the IITs have been the biggest beneficiaries of that. The other area that I can show you as a very real example is regional connectivity, whether we talk about roads or even the UDAN scheme that I launched as the aviation minister. By enabling UDAN, by enabling regional connectivity, we were able to unleash markets, we were able to come up with a very innovative solution that allowed us to connect places like Hubli. I was just speaking to the MLA from Hubli, Vijay, and today where we were worried about 2 flights a day from Hubli, we now have 15 flights a day from Hubli, because we were able to unlock through an innovative solution to the UDAN scheme this kind of economic activity. So where are the innovative solutions for city finance? That's what our practitioners have to think about. We have to get out of the straitjacket of budgetary cycles and budget funding. We have to think about innovative institutions we create. We have to come up with innovative solutions that we have to think about. And all of this innovation has to be to unlock and unleash markets and economic activity. Only when we unleash economic activity, only when we have well-functioning markets, and when I say market, I don't mean Khan market, I don't mean Lajpat Nagar market. Unfortunately, when I speak to officials, I say market, they don't think of a market in terms of a real market as an economist or as a business person would think about it. So we've got to be very astute. We've got to really understand how we unlock economic activity. How do we have well-functioning markets? How do we have people willing to make long-term investments? Once we can unleash that through innovative solutions, whether it's the Higher Education Financing Agency or whether it's something like Udaan, then we will generate the durable revenue streams, the cash flow on the basis of which we can finance capital assets and we can unlock city finance. That's the basis on which we have to think. We have to think about cities as economic engines which generate these durable revenue streams. We have to unlock these innovative solutions, and then we should talk about financing. Talking about financing without talking about this thinking on economic activity and market generation is putting the cart before the horse. So really think about cities as economic engines, revenue sources that we can monetize, unleash economic growth, and enable us to deliver the kinds of facilities that our cities need. I'll end here and I'll turn it over to the moderator, Mr. Rao.
Thank you, sir. Thank you, sir. I think you've outlined a very strong agenda. Thank you, sir. You've outlined a very strong agenda, and the 3 points, hopefully all of the panelists will both dwell on and comment on as well. And even as I lead across the panel, I wanted to make few opening remarks and then pass on to each of my panelists. So very quickly, I think, the one sort of statistic which keeps on gnawing at me is that the size of the US municipal bond market is $4 trillion. And that is the size of our GDP as well. And that should actually make us really sit up and sort of think about that what is it that we have as a potential which we can do, which the US has sort of done. Their journey, of course, began maybe 100, 150 years ago, and our journey may be much shorter. So it's not that we can't sort of get there. But even in Indian context, I would say that we have a corporate bond market of about 40 lakh crores outstanding. The issuances from municipalities that have occurred till now under our new regulation is barely 2,500. And the number of municipalities, urban local bodies, if I had to add up, would be close to 8,000 plus. So to me, the number of issuers who are potential issuers which exist in our market, the kind of potential that exists for investors as well, is very, very high. I look at our role at SEBI as really being developmental in this behalf, in encouraging municipalities to both be issuers, to spruce up their financials, spruce up their financial reporting, and in a way be able to lend confidence to the investors that they are at an even keel in being able to tap the markets. We have, in the last 1 year, conducted about 4 to 5 workshops across different parts of the country. I think in all, we would have reached out to close to 200 municipalities, many of whom have, learnt about municipal bonds for the first time. But I think we have shown examples by getting to the workshops, issuers who've already tapped the markets and explained how have they gone about doing it. So in a sense, there is somebody to emulate, somebody to compare notes with, and which I believe will hopefully kindle far more interest in doing these issuances. I think to the point Mr. Sinha made about public finances, I think the other reality we must confront is that municipalities have been very used to receiving state government and central government grants. So the focus on their own efficiencies of revenue collection or looking at other means has sort of lagged. I think that is changing, and it's changing because of technology. It is changing because of how our payments systems are sort of enabling a lot of the tax collection and so on. But I take Mr. Sinha's point about innovation as well, and probably I'll dwell on 2 or 3 ideas and request my fellow panelists also to comment on. One is the success of many of the schemes that Mr. Sinha alluded to. The one which comes closest to my mind is the ECLGS. And this sort of unleashed quite a lot of funding on the strength of a central government guarantee. And it was partial guarantee, and those guarantees actually have not been invoked, which actually shows the robustness of credit underwriting which also occurred. In the recent budget, the finance minister actually announced the creation of UIDF, the Urban Infrastructure Development Fund. And to me, what municipalities provide is urban infrastructure. At some level, if one can look at the UIDF becoming a guarantor vehicle to the municipal bonds that are issued, to my mind, investor confidence will also rise, and the kind of corpus that has been created can have a multiplier effect in terms of what can actually come to the market, maybe fulfilling the trillion rupee bond issuances. The second thought which we have had and which we have been popularizing with the municipal authorities and the state governments has been to explore actually harnessing structures such as REITs and InvITs. Real estate investment trusts and infrastructure investment trusts over the last 5 years have reached close to 3 trillion rupees in asset sizes. And again, several of them, I would say, are those that have been established by the government itself. The NHAI InvIT does this for road assets, there's the Power Grid InvIT, and so on. To me, again, it is about taking what are revenue generating assets of municipalities and being able to house them in either of these two structures could again provide a lot of monetization ability and ability for the state governments and the municipalities to redeploy into creation of fresh assets. Beyond this, to my mind, and a factor of reality which I have again realized is that probably the top 100, 200 municipalities are large enough to conduct their own issuances, but the next slope which sort of happens leading up to the 8,000 plus urban local bodies may be too small. So one thing which we need to think about is creating pooled finance vehicles. And there are several examples in this country, including the TNUDF and so on, which again could be harnessed as a format for the smaller urban local bodies to tap the markets. So with that, let me invite my fellow panelists. I'll start with Shri Vikas Gupta. Please.
Thank you very much. Whatever I am going to say in this panel is with my limited experience of working in Haryana. There is one disadvantage with IAS is that you are confined to a state till the time you come to the government of India. So all of you will, I will request you to excuse me. Whatever I will say is limited to the Haryana only. And as Jayant sir has just mentioned, expectation from two of us is innovative solutions. But coming, whatever I will talk about solutions for the problem, one thing which I will like to emphasize on, there is a market for the financial instruments in India. I was just going through one statistics of RBI, which mentioned that the incremental household savings from in financial instruments in last 5 years have increased from 55.9% to 65.6%. So there is a market. There is a supply from investors' point of view, but there is no demand from the municipalities or the agencies involved in the urban infrastructure development or urban development. Why municipalities and urban infrastructure development agencies? Because still urban infrastructure development in most of the states are governed or controlled by the parastatals. So both of these agencies, municipalities as well as parastatals, are investing in the urban infrastructure. But why don't they go for? It's as simple as no one wants to be disciplined. When I have an easy path of getting money from the state budget, as sir has mentioned of budgeting, all of us are not going to make us disciplined under the markets. So the biggest thing is with our mindsets, and I have worked in the urban municipal administration as well as urban development for last 10 years. This is the only post where your office is surrounded by the MLAs. So MLAs or ministers, even ministers, they keep on coming to your office because just they want more and more funds for their municipalities from the state budgets. So we have to bring in that discipline. And how will it come? again, as a practitioner, what I have felt, it all comes from the top, from the chief minister. States are driven by the chief ministers. If chief ministers say, yes, it is to be done, so it comes to the administration side as well as to the political side also. It has happened in my state. My chief minister in last 9 years have tried to bring in discipline in the municipalities. And I have worked, like as I've mentioned, in last 12 years, my municipalities in Haryana have improved, not to that extent which we want to, but they have improved. So first and foremost, it has to come from the municipalities, from the elected representatives. One of the reasons why is it not coming, as far as my understanding goes, in most of the states now what is happening, at least again in Haryana also particularly, that the elected representatives at the municipalities level are not graduating upwards to the MLAs or the MPs. So most of the time you see that the MLAs and MPs have not worked in the municipalities. So there is no upward mobility sort of thing. So what they think, their attitude is confined up to the municipal, at local level only. Whatever grant they can get from the state, they want to confine that. They don't see the discipline which is there in the budget making at the state level or at the center level. So one aspect which is actually we should work on bringing that part, that yes, it is important for the city development or for the urban infrastructure development. Second, which I've mentioned, again, parastatals play a very important role in the development of the urban infrastructure. In Haryana, HSVP or erstwhile Huda or HSIRDC have contributed immensely to the development of infrastructure. And again, I have worked in both these two organizations. In last few years, they have raised quite a good amount of loan from the banks. HSVP or Huda to the tune of 30,000 crores rupees and HSIDC to the 15,000 crore. But both of these organizations opted for the banks. They never thought of that going to the markets. Because why is it so? It's easier to get loan with the state guarantee and the land bank which you have, which you can put. So banks are also comfortable, organizations, both parastatals are also comfortable, they get the state guarantee also. So nobody wants to work for that, accessing the market, hard work to access the market. So we can think municipal borrowings, which we are generally saying, should not be confined only to the municipalities. Parastatals should also be made part of it. And in most of the states, development authorities are there, industrial infrastructure development corporations are there. So rather than going for the banks loans, that may be one part, but they must go for the debt markets also. And I am sure investors will also be comfortable with the parastatals compared to the ULBs. Again, because there are multiple stakeholders in the ULBs. Third, and the equally critical or the important is the capacity. So we absolutely lack the capacity to float the bonds. So we don't have credit ratings, although Government of India tried to enforce through Amrit and other interventions, but most of the ULBs didn't get their credit ratings done. Those who have done, they never opted for the market borrowings. So that capacity is required, because one of the reasons is people don't have capacity. I am sure in my department, no one has read the SEBI's regulations for the market borrowings. So that capacity is not there, so which we must work on that. One solution which my state had tried to do is, since ULBs are not going for the market borrowings, or they are not bringing them under the market discipline, so my state has one NBFC, Haryana State Financial Services Limited. So now what my chief minister, I am very candid in that, if any minister or any MLA put pressure on him and says, no, you just give me extra grant for my municipality, so what he suggests, you get the loan from this Haryana Financial Services Corporation Limited, which pool funds from the different boards and corporations, and 2 municipalities have got some loan for their projects from the HFSCL. So it has bringing in some sort of not a market from the public side, but still some sort of borrowings they are becoming accustomed to. Thank you.
Thank you, Vikas ji. I'll request Sreedevi ma'am to also speak, please.
Good afternoon, everyone. I'm a practitioner from Telangana. I was Commissioner and Director Municipal Administration between 2016 and 2020. Now I'm Secretary Finance. So the story of Telangana is little different. Let me just tell you that the state was carved in 2014. And the state was formed with a lot of aspirations for development and to take strides so that we move up the ladder of prosperity. And we have in a way done so, because today we are the first, I think the top in per capita incomes in the country. We are with 2.74 lakhs per capita. We stand almost on the top. But we didn't start from there. If you look at the story of Telangana, we were around 1.7, I think, lakhs per capita when we started off. Why I'm giving you this metric is urbanization or urban growth or municipal finance is going to actually satisfy the aspirations of the people. So it's not about how a city in isolation or how ULB in isolation is going to get on to a growth trajectory. But definitely if a state is predominantly urban, like for example, when Telangana started off, we were 37% urban population as per 2011 census. And then when we did a kind of a calculation, it was almost like we were crossing 50, though we have not done the census later. But we were on fast track of urbanization. So first thing that we did is we recognized this and then we formed new municipalities. So we had around 71 municipalities in Telangana when we started off. In fact, we started off with 38, then became 71. And later in 2018, we have formed around 142 municipalities. This is exactly to garner the support of the administration as well as better administration and also for development of cities. If when you compare a rural local body and an urban local body, the thing that comes quickly to your mind is planning. Planning is one important thing that triggers off growth. As sir has mentioned, urban development authorities are growth engines for the local bodies. So this is one way of tracking where we thought that if you are able to recognize some of the major gram panchayats and then identify, cluster them into urban local bodies, definitely it triggered better growth. Number one, that was one. Second thing is we have also come up with the new Municipal Act, which is Telangana Municipal Act has come into being from 2018 onwards, and we conducted elections under the new act for all the 141 municipalities. We have now added one more, so we have 142 municipalities in all. So when the thing is, as it was stated, budget is never a lookout for a urban local body. As CDMA had looked at, what was the resources that we had? We had property tax, and we also had development fund that comes out of building permissions and layout permissions. These are the major own resources for the municipalities. In addition to that, what you get in devolution is the stamp duty. And what you get is profession tax, which is collected by the state and then devolved to the urban local bodies. But devolution of taxes or resources is not as straight as it happens, but mostly municipalities have to depend on their own resources. That is the property tax, mainly property tax. So we had done a lot of reforms, and we had done property mapping of all municipalities, and from around 230 crores, that was the base, we got it to 528 crores in a span of just with the property mapping and then improving the collection efficiency. But despite this kind of reforms, and in Amrut phase 1, we were actually, every year we had got the benefit or the incentive for fulfilling reforms. We have also done under EODB, we have 57 reforms that were there in the urban sector. All of them we have complied with. And Telangana was, along with AP, the #1 in EODB in that year. But despite that, my friends were talking about what is the appetite towards municipal bonds. Greater Hyderabad Municipal Corporation went in and issued a municipal bond. That was the only urban local body that could do so. Because when I did a credit rating of my 25 largest municipalities, I found that only one municipality had B+ rating. This is because of the population, the base. As we talk about, these are all small urban local bodies. By themselves, they do not actually, they cannot leverage their own resources for tapping the market. So there has to be some transaction advisor or some organization which is going to take them through and give them the leverage of having better funds. We also did a need assessment for how much of the infrastructure can we meet up with the present level of budgetary support or its own municipal, urban local body's own resources. As my friend, when she was mentioning in the theme, when she was opening the theme for this panel, she said that in the next 3 years you require X amount, which is voluminous. But when we did this, with the available resources, it would take 60 years for us to fulfill today's aspirations. Is that we are waiting for? Not at all. Everybody wants a good road. They want developed the sewerage systems. They want drinking water system. They want everything that is there, which is comparable to any other city in the world. Now the information flows much faster than anything else. So you know that what is there in one of the best cities in the world, you want it in your city here. So that is how the people's aspirations are. In order to do that, or to meet up those requirements, Telangana has taken a different path where Telangana Urban Finance and Infrastructure Development Corporation was leveraged in order to seek loans for the municipalities and then see that these loans are distributed and the immediate requirements for the infrastructural requirements of the ULBs are met. But as I mentioned to you, there are a lot of issues that come in even in here, because we have some people talking about how the local self-government vis-a-vis the state government, how the interference of this local self-government is how the state government interferes with local self-government is all a known story. Just like central government in cooperative federalism, we talk about issues between central government and state government. Same issues happen between state government and local self-bodies, local self-government. So this is where you need to, these are the challenges which you need to meet up. In having a robust structural or the policy framework within which you are able to actually generate the confidence of the people and see that we are able to leverage the markets and get the funds. In fact, I totally agree with sir when he mentioned that urban development agencies or ULBs have to be seen as growth engines. Absolutely. In fact, we had only 2 urban development agencies when Telangana was formed. We have formed another 6 in order to see that these are the ones which are going to trigger growth. Now, if you look at Hyderabad, the success story of Hyderabad Metropolitan Development Agency is very well known. And we also have come up with a lot of special vehicles, especially for road development or strategic road development projects or the ring road, outer ring road, which is totally funded by HMDA. So these are certain things with the urban development authorities can actually become growth engines for meeting the infrastructural demands of the urban local bodies. But these lot of things need to be knit together in order to get that kind of advantage. But definitely Hyderabad is 690 square kilometers urban local body. And if you look at the second largest local body, Warangal, Greater Warangal Municipal Corporation is less than 6 lakhs population. So, and if you look at the next largest would be around 4 or 3 lakh population. But mostly our urban local bodies are of the strength of 1 lakh population or so. So this is where we need to look at when we are talking about, we are talking bigger things when we are comparing our cities with other cities in the world and how we are tapping the markets in the world. But what are the things that we have with what kind of urban local bodies are we working with? That is a very important thing to be addressed. In fact, after moving from municipal administration, I am now in finance. And even here we have similar issues. It's not just we are for the local, urban local bodies or the local bodies that we are looking at, but here also the deficit financing, because our budgets are always not sufficient to meet our requirements. Here also we go through a lot of issues about generating resources to meet up the aspirations of the people. So I think that public borrowings or municipal bonds or innovative methods of financing are the thing in addition to the reforms. It's not that you are making a urban local body a parasite on grants, but you are actually trying, when a toddler is there, you are not going to tease a toddler that he cannot walk. You're going to train him to walk and then run. So that is where we need to look at. Our local bodies are very, very nascent. We need to identify what are the things that are required. in order to nurture the local bodies so that they move and they really can go much faster and catch up with the pace of the world. Thank you very much for giving me this opportunity.
That was a wonderful analogy of a toddler, learning to walk and to run. And indeed, to my mind, I think our destination is really making them Atmanirbhar, self-sufficient in every respect. I'll invite Arnab to, sort of share his thoughts, both as a markets person looking at issuers who come to the market, but also investors and what is their perception around, municipal finances and borrowings. Over to you, Arnab.
Yeah, thank you, sir. And good afternoon, everyone. Very fascinated by all the discussions that are happening. All what have been put across till now are realities and good things to do, honestly. Are we doing it, or are we capable of doing it, is something that we need to look at. When we talk about India reaching a $5 trillion GDP economy, and infrastructure playing a big role in it, I guess urban infrastructure at the grassroots level is a big engine which has to kickstart. And we believe that as we move across, honestly, this is something from my organization as well as my group organization, State Bank in general. This is something we believe that is a very, very big opportunity, very, very big good thing to do. And I agree with Vikas when he says that the push has to come from the top. We have been going around meeting very top level at the states, trying to see, and what I can very positively say is that everyone has a total buy-in in the fact that this is something which needs to be done. I will just mention few practical problems that we see, both from the issuer side, which are the municipalities, as well as Pramod ji has said, from the investor's point of view. Issuers, the good ones, ma'am was talking about Hyderabad. There are a handful of those municipalities which has already done some work, and are credit-wise much more acceptable names. For them, it becomes a little easier to access the market. What we need to look at, and this is something where the focus should be, is that how do we make the others which haven't yet done it or are not of the credit level where the market would be very confident of putting money into them, how do we bring them to the market? When I'm saying market, as Jayant sir was correctly saying, it is not, we are talking about the capital market, and it doesn't have to be only bonds, even for the loans as well. We are talking, working with one particular state where there are 4 or 5 municipalities who are very keen to, who need to access the market, honestly. Problem is, only one of them would be, once we complete the whole rating process and all that, only one of those municipalities would be something which would be accepted by the market at this point of time. Our assumption is that. So the challenge would be that how do I bring the others together? Now, is it going to be a pulling of the whole thing so that we can then try to see if there is a possibility of doing a pooled finance structure on that? Is there any possibility to see a credit enhancement that can be done? I know there were institutions which have been set up to look at credit enhancement structures for the municipalities. That have not taken place, that has not taken off. We need to look at those practical things. What has prevented this credit enhancement structures or the institutes who offer credit enhancement not to succeed? Is there a pricing issue? Is there something which we need to address? Because at the end of it, as much as we meet and try and discuss the need for the urban local bodies to come to the market, the practical issues needs to be addressed. And these are the practical realities that many of the urban local bodies are not ready in terms of their credit profile to hit the capital market at this point of time. We have been working rigorously with them. It's a time consuming and it's hard work to get them. The practical problems, as I said, I will mention those. One is to make them aware that there is a avenue which they can look at. I was mentioning somewhere else that many of these municipal officials are overburdened with their day-to-day mundane activities. For them to look at something beyond what they are currently doing, just to look at financing, just to look at the need to improve their way of working so that their records, so that they can tap the capital market is something which is not, it doesn't appeal to them. आप मेरे लिए क्या है? At this point of time, it is additional work for me. मैं करके मुझे फ़ायदा क्या है? So it is the ground level, those people who are going to eventually work on this. It is the education that we need to give it to them. That the budget support, the budgetary support, or the grants, they are not going to come anymore. So if you have to fund yourselves, you will have to fund it by yourself, and for that, you will have to tie up your shoelaces. That is one. Coming to the other side, from the investor's point of view, I am a pension fund, I am an insurance company, I have my own guidelines. I can't, at this current juncture, I cannot invest in a municipal bond which is not up to a certain threshold of credit rating. So that is one challenge. Secondly, if I am a, sorry, if I am a market player, if I am a municipal mutual fund, or even if I am a retail client who has invested, Indore has done a municipal bond issuance. When I need the funds, do I have a market where I can get an immediate exit? At this point of time, the liquidity on this market has been very, very less. Last 3 years, we had one issuance per year. This year, at the beginning of the year, my expectation was that we would be having at least 6 to 7 issuances. At this point of time, when we sit here, we already had one. I guess there could be another 3 that might come in this year. We need to increase that frequency of issuances that is happening. It is not that municipalities are not looking to issue. The practical issues of issuing a bond, things have improved quite a lot, and I can thank this, in this forum, I can say that SEBI has done a great job in that respect. However, just to give you an example, we are working with one municipal corporation who is looking to issue a green bond. Cost of issuing a green bond, because of the parameters which needs to be defined and then observed, is exorbitant for a municipal bond. It basically, for 100 crore issuance, the pricing that they are being quoted by the agencies who actually monitor this green frameworks or guidelines that needs to be met is going to be about a percentage of the cost. Now, in today's market, in Indian market especially, we don't have investors who gives you a premium for issuing a green bond. So if that cost is not supported, then I don't have any incentive to issue a green bond. So those are the things, practical issues that we have. I guess as we discuss further, some of those will come up more. What I can tell you is that there is a buzz in the market. Municipalities are aware that this is something which needs to be done. State government level, there is a buy-in. And another very, very positive thing is, I don't know how much it is in terms of the financing bit of it, but many municipalities or state governments are looking at this journey to get ready for issuance of bonds, to clean up their books, or to be efficient in terms of their record keeping, in terms of the way things are done in a municipality. This is a positive sign because this means that at some point of time going forward, they would be able to go for the market as and when there is an investor interest in that. I'll stop here and then we will take up points. Thank you.
Thank you. Thank you, Arnab. I think, just to pick out a few elements which I heard across, I think one is parastatals. So indeed, the ability of parastatals to tap the bond market exists. And again, if there are anything required from our SEBI guidelines, we are quite happy to sort of visit them if that's an enabling structure that is required. But I should also confess, as we did these workshops, we realized a lot of state governments, a lot of municipalities actually have not fully seen our framework, whether on municipal bond issuances and so on. So there are now, I would say, thanks to these efforts, states which are reaching out and saying, can you please come and do a day's workshop, and so on. So I'm quite encouraged around those kind of themes. The other which Arnab spoke about, we've just in June at the hands of our finance minister launched the Limited Purpose Clearing Corporation, which is really for the corporate bond market. We will indeed move measures to sort of see whether municipal bonds can also go into that to at least provide some sort of financing against this as well. It may give some level of liquidity that you're mentioning that investors may be desiring. Not to the fullest extent, but at least to some extent which is possible. To me, I wanted to turn now to Ms. Sreedevi, more around that with the parastatals that you've created and the gap that you said between the largest municipality and the next one. Is pooled finance something that you're looking at? Are they enablers that you want from the market side? Or are the parastatals, like how Vikas ji said, carrying that burden? And is that fine?
Actually, when we had formed the new municipalities, we have leveraged the TUFIDC. That's the one organization that's a transaction advisor as well as the Infrastructure Development Corporation, which looks at the accessing the market for these municipalities by helping them develop projects that are revenue generating as well as getting money or the funds at a cheaper rate. So that is how we went, because pool financing again has a lot of, because I think that itself is a big agenda, how you look at, if you are, in a simple thing, what I would like to say is when you pull up the resources of various municipalities and then you prioritize amongst that, the projects that are going to come are going to be not substantial enough, which may be satisfying the pool of municipalities. Again, this is the same thing, the base being very meager or thinly spread, the projects also are not going to be intensive. But whereas the aspirations of the people are so huge. For example, with the TUFIDC as the leveraging partner for the municipalities, we have gone in for special Nala development program, we have gone for strategic road development across the cities, then regional ring roads, bypass roads, then sewerage treatment plants, and solid waste, like waste to energy, as well as other aspects, other projects were taken up, which are like more fulfilling for a citizen to actually pay more towards the property tax. Of course, it's not that we have enhanced the rates of property tax per se, but definitely people will be willing to pay if we are able to give the services. But maybe if you are going to do pool financing where the Gram Panchayat just got merged into municipalities, it's too very early to go in for this a little more complicated kind of a group or a municipal financing option. So that was one where we tried though, that's what I said. We did credit ratings of municipalities and looked at can either bonds or pool financing is going to be the option. But that was not what came out of those results. So we went in for borrowings.
Right. And I continue to get inspired by what Mr. Sinha said about further innovation. So to me, amongst the things which again exists as a market structure is securitization, is ability to actually bundle together these loans. So several of what the parastatals have extended to municipalities and so on. There is an ability to sell that down, that loan. And in essence, what I sort of am portending is that just like we don't want banks to be the dominant lender at all times, we want the markets also to be there. And the reason for that, I just wanted to dwell on for a minute or two, is we mentioned about how large the insurers and mutual funds have become, or pension funds have become. They can only invest in bonds. They cannot extend loans and so on. So the ability to issue bonds is very important to fulfill that side of investor demand too. And at some level, the other thought which came to my mind, was whether social impact bonds, which we are thinking about for the civil society organizations, whether that's something again for municipalities to look at, because several of the projects are not revenue generating in the traditional sense as such. They are at best break even and so on, but they have a large impact on people's lives. Good, clean, healthy water, clean sanitation, all of that makes a tangible difference. So it was just a thought which came to my mind. But Vikas ji, any closing comments from yours?
I would like to just say that it's a matter of time. That's what I mentioned in my initial thing. It's about a toddler. So it is like, it's a matter of time when these things will be taken up and taken up well. Now, the larger municipalities, definitely municipal corporations can look at those options. But the kind of urban local bodies that we are talking, especially in Telangana, the number and the size, definitely I think it's a matter of time they will take on.
No, certainly, ma'am. Vikas ji.
As I have mentioned earlier, there is demand, as you have just mentioned it again, that there is a demand for the bonds or for in the debt market. But what is required is हमें अपने आप को बदलना है, क्योंकि as she has mentioned that we need 31 lakh crores, and that was also estimated way back in 2012-13 by the expert group. So our cities are underfunded. We have one big source of funding in terms of bonds, in terms of debt market, but just because of people like us, which I belong to, and government servants की चलता है, जो easy path हमने ढूंढ रखा है, और उस कारण से काम नहीं हो पा रहा है. So there is an urgent need, including what I feel is capacity building for tapping these debt markets. So what I can think that at least in Haryana, we should come out with some sort of a bond issuance for at least 4 to 5 municipalities, which I think they are better administered, better managed, and will have a trust of the markets also. But at the cost of reputation, we have to work hard for tapping this market.
Quite well noted. I think one other remark I wanted to make before I hand back to the chair of this panel is regarding credit rating. And I know it sort of becomes quite a challenge always to get the best rating possible for municipal corporations. There were 2 elements which I picked up in the discussion with rating agencies that I thought is worthy of sharing. I think one is that when they look at a municipality, the dependence on state government and central government grants actually causes them to lower the ratings. So at some level, the message is that if you are self-sufficient, you can actually score higher on the rating scale. The second is that we can't wish away the state and central government grants or flows of funds which occur. But there is an element which they attach, which is saying that while it is meant to be non-discretionary, for instance, ma'am, you refer to stamp duty, which is paid over the professional tax. At some level, if it is encoded as a statute, that yes, this will always get dispensed to the municipalities, the rating agencies will draw greater comfort. But the minute it is not, it is then subject to how the state budget then allocates. That in the rating agencies and the investors' mind is a discretion reserved by the government. Therefore, they don't attach value to it. So maybe there is some level of, things which are normally granted, which one could consider as being that minimum will always sort of be given. I know there will be emergency situations or different where you can override that, but maybe that is a way of improving the ratings. But with that, let me turn it over to the chair of the panel for his comments, and then we will have Q&A.
Thank you very much, and thank you to the panelists for their very fascinating interventions. I was listening intently, and I think I learned 3 or 4 different things. Let me share those with you. First, I think you're absolutely wrong. I would say this to the officials here. If you think all the change has to come top down, that means that you're not thinking about the problem the right way. It's not possible for ministers and chief ministers to come up with innovative solutions. We have too many other things on our plate. It's the job of the officials and the technocrats to come up with an innovative solution and say why it's a breakthrough solution. If you're going to sit there and say, well, we are waiting for the top-down direction and that we have to do this, I don't think anything will happen, and we will be back to incrementalism, which is frankly where we are right now. So the innovative solutions have to come from all of you. You have to come up with, why we are going to be able to have a breakthrough in urban finance if we do this. You present this to the decision makers, and they will then, of course, react, and they'll give you good suggestions and so on. But those ideas have to come first from you, because we have too many other things we have to deal with right now. So please don't wait for us. Take the initiative, ask for forgiveness, don't ask for permission. So that's my first reflection. Second thing I will say is that it seems to me that we've settled into a lazy equilibrium. It's a lazy equilibrium. What's the lazy equilibrium? We've got the parastatals, we've got Huda, we've got Hyderabad, we've got Bangalore. Can Huda finance itself from the banks? Yes, of course, it's sitting on a massive land bank. Can Hyderabad do it? Of course it can do it. The problem is not Hyderabad or Gurgaon. The problem is Hazaribagh. How do I finance Hazaribagh? And it's not just about developing Hyderabad, certain areas of Hyderabad where we need capital investments. It is, can we get capital investments precisely by running cross subsidies between the economic engines that I spoke about earlier and to those people who can't pay? And let me sharpen this point somewhat more. If I want to run trash collection, if I want to run water purification, if I want to improve the quality of roads, who's going to pay for it? It's not going to be the average urban citizen, because they can't afford it. If they could have afforded it, it would be done by now. That's just incremental thinking. It's when you unleash value like Gurgaon. Look at Hyderabad, cyber city, right? Cyber city is what it's called. Look at Bangalore, look at Whitefield. When we create these economic engines like a Gurgaon, like a Whitefield, like a cyber city, it unleashes enormous amounts of value. We have to enable this value to be captured, and this then to be created into a cross subsidy that cyber cities unlocking of economic value will enable a waste to energy plant for Hyderabad city, or for that matter for Warangal. You see, if I'm unlocking value in Gurgaon, why can't I use that to pay for Ambala? That's what we have to do. And that's the breakthrough problem we have to solve. That's the breakthrough solution that we need. Is it easy for us to finance, one more thing in Gurgaon? Can I put a water purification plant in Gurgaon? Yes, because Huda will just borrow lazy financing. You have access to the government balance sheet. You have access to your land bank. You finance it. You go home. Where's the breakthrough? Where's the innovation? There's no innovation. Officials are not innovating. And then you're saying, the minister is not telling us to do it. What are you offering them? How are we using Gurgaon as an economic engine to pay for the less developed parts of Gurgaon? How are we using Hyderabad as an economic engine to pay for Warangal? These are the cross subsidies. These are the innovative solutions we have to think about, because the people who need the trash collection, the people who need the clean water, the people who need the streets, the people who need the retail zone cannot finance that right now. So we have to come up with innovative solutions so that we can actually do these cross subsidies from these economic engines. That was my point, which I made right at the outset. Let's use this unlocking of value in these economic engines to really provide resources to the places that can't pay for it right now. That's where we need the breakthrough funding. Huda can pay for itself. Hyderabad can pay for itself. Bangalore can pay for itself. But what about everybody else? How do they get these resources? How do we meet their expectations? And that's where we have to snap out of this equilibrium. We have to find innovative solutions, and we have to start to put these innovative solutions to work. And I'll just conclude by saying that we've got to stop thinking urban local bodies. We've got to stop thinking municipalities. They can't go into the bond markets, they can't go into global capital markets and be able to get 30, 50-year paper issued and then service that. That's way beyond their capability set. Don't expect them to do that. You'll keep talking capabilities. And say, well, sorry, Warangal can't do that, so Warangal can't raise any money. That's not acceptable. How do we find for Warangal an economic engine, a development agency, a parastatal, whatever you want to call it, and make that to be a high capability, high capacity institution that can then cross-subsidize the rest of Warangal. That's the innovation, the institutional innovation we have to come up with. Can IIT Delhi compete with Harvard in global bond markets? No, but HEFA can. That's the innovation. That's the aggregation thing that we've done. So what is the aggregation? What is the institutional innovation that can enable Warangal to have the capabilities to go out and raise money from pension funds, from investors, from green financing agencies, which are all looking to do green financing? So we have to find these innovative solutions by creating these development agencies. I agree, not urban local bodies, not municipalities. It's not possible for them to be able to go out into the global capital markets and reassure investors and reassure credit rating agencies that they have durable revenue streams, that they have, securitized assets, etc., that will enable them to service these bonds. It's not possible. Don't even expect it. The solution has to come, the innovation has to come in creating new institutions that can go to a Warangal, that can go to a Hazaribagh and be able to generate those secured revenue streams that will enable us to be able to put a waste to energy plant in Hazaribagh. That's what we have to solve for. We don't have to solve for Gurgaon. We don't have to solve for Whitefield. We don't have to solve for Hyderabad. That's moving along fine. And if we restrict ourselves to that, we're not solving the real problem. If we have to get to the 30 lakh crores, Gurgaon has no problem raising money. Gurgaon, we'll get to 5 lakh crores for sure, because Gurgaon and Hyderabad and Whitefield will soak up the 5 lakh crores. But the 25 lakh crores that Hazaribagh needs, where is that going to come from? Who's going to cross-subsidize Hazaribagh? That is the problem we have to solve for. That's not what what I'm hearing from the panel right now. We can't throw up our hands and say, yes, we are creating these parastatals and they're doing fine and that's okay, and let's wait for the Chief Minister to solve Ambala's problem. You have to come up with a solution for Ambala. What is it? You see what I'm saying? So I'll stop here. Obviously, I've raised some provocative issues, and I'm sure the panelists will have some points of view, and the audience will have a point of view on this as well. So I'll stop here. Thank you.
Thank you. Indeed, only when you're challenged, I feel people rise to the challenge. So thank you, sir, for throwing that out. But yes, it is Q&A time, and let me open it up for audience questions, and you can please raise your hand, and somebody will come with a mic to you.
I agree with you that we've got to solve for Hazaribagh, not solve for. But the point is, I think money is fungible. Even Gurgaon and Bangalore are getting some capital out of government. If that can be replaced, that money can be better utilized. Even that is a way of doing it. But for us to do it, there are a couple of, one concern is even corporate bond market in India is struggling. You come up with a corporate bond guarantee fund, something similar for municipalities might kickstart the market. That's one, this thing. The other way of solving for municipal bonds is to have a structured bond where you ring fence precisely the point that Mr. Sinha was making, that growth engines and the receivables from there will probably get a better credit rating, and it's exactly the point that it's hard finance, it is not lazy finance. There must be some hard work to meet the market expectations, but it can be structured around that. If these two are, in my opinion, necessary things for us to make a breakthrough into municipal bond markets.
Thank you. I'm treating that as a comment rather than a question right now. So, but yes.
Hi, good afternoon.
I request everyone to please introduce
Shishir Gupta from CACP. Thank you, Mr. Sinha, for pushing the envelope. I just have one observation, right? I was part of McKinsey's 2010 report, which had put out the number of $1.2 trillion that India needs, right, to build its urban infra. But I recently did a paper which says that even, is it true at an aggregate level? Yes. But are cities spending money efficiently in all services that they are providing? The answer is no. Right? So what I mean by that is, for example, Bombay spends 1,200, 1,300 rupees per capita on solid waste management compared to few hundred for Indore. But the outcome for Bombay is far worse. Right? The point I'm making is that we have not discussed, we are moving we are assuming that for improved outcomes we need more money. But I think one of the innovations probably could be how can we allocate money more efficiently, right? Is that also 20% of the answer? Thank you.
Thank you. I think I look at transparency around what are the activities and speed at which it is available for public to review as partly adding to that. And I think City Finance, the portal that Mohua and City and Janaagraha run, actually allow a comparison of several of the city finance statistics which can throw light on this, including revenue generation, including where the spends are going and so on. But you are right, we need to throw more light on that, and I think that will get things moving.
Good afternoon. My name is Ramurthy Iyer. I'm from SBI Capital Markets. So just to add to your point, in terms of the credit rating, out of the total 500 Amrit cities that have been put up, A- and above is only 36, and 160 and above is the BBB, that is investable grade. So yes, there is a need to credit enhance. There are domestically these DFIs like NAFED, who's working on a scheme. IFCL and others do have a scheme for credit enhancement for munis. So they are working on that. And in terms of the innovative structure, the state of UP is done for the weaker municipal bodies who are not AA. As what Arnab was referring, all these pension funds, insurance companies need to have a minimum AA rating and above, below which they can't invest. So with the help of backstop with the UIDF, where the stamp duty, etc. gets collected of the state, yes, that structure is being explored. And there was only one deal of Tamil Nadu Urban Development Fund that was way back in 2010, where pooled finance was there for smaller projects. Through the various SEBI initiatives that we've been struggling with various municipal corporations across countries is, they are not able to identify a right project because there's still confusion whether the state is doing the project or the particular municipal corporation is doing the project. So we've been harping on this with all the municipal corporations to whatever projects they are doing, directly, indirectly, it falls into the green. So there are these guys, these multilads who are ready to fund projects there on an NCD route also. So just to answer your question in terms of the universe being there, investor pools are ready. Say like the insurance company, for example, mandatorily need to lend minimum 15% of their AUM to the infra sector. It is mandatory, they don't have option there. So that pool is waiting. But we need to come up with regular updates for investors. We as a municipal corporation should be able to answer hard questions and show up the projects, like you were saying for Varanasi or Warangal or Hazaribagh. Once you have the projects and you show the impact, I think money is waiting there. And since these mandatory guys are there, obviously the price difference will be as per the market conditions. There was one municipal corporation who was raised subsequently 3 issuances. In the last issuance, the spread blew off because the credit was not catching up. So the market will penalize if you're not performing well. If you're performing well, the markets will give you a good price. So investors, the sum of it is investors are ready. The pool is there. We just need to show them good projects and our ability to serve it in a right way.
Thank you. Thank you again.
Good afternoon. Good afternoon, CA Pankaj Goyal here. I was a part of the financial management specialist team who designed the concept of smart city, presently working as a team leader in Jharkhand. Sir, don't you think so? We are missing one major part because we are discussing regarding the credit rating and everything. But the major part, whenever any borrowing has to be there has to be the financial reporting. Even when you go for a bank for any loan, they always check our annual financial statement, right? In the municipality, the last document came was the National Municipal Accounting Manual 2006. In the last 25 years, Companies Act has seen 2 changes. But we have never changed the National Municipal Accounting Manual. If we can change our format of annual financial statement where the own revenue and the grant can be separate and the concept of EBITDA can be generated, whereby immediately we can see whether the municipality is self-sufficient to debt service, only then we will be able to identify the surplus there. And the last part, 15th Finance Commission has already recommended migration to the circle rate. But still, most of the states have not migrated to circle rate. And that is the reason the property tax, the major potential, right, has not been exploited till now.
Right. So again, thank you for those observations. So the quick sort of thing which I'll say is the National Municipal Accounts Manual is now in its third version getting prepared. So there is upgradation of that happening. The 15th Finance Commission indeed has had great recommendations. But yes, there has been progress which has been, I would say, dispersed across different states. And indeed, I realize the biggest challenge has been moving from single entry to double entry. And I think that again is where hopefully transparency will occur. Again, I just request that, please make questions to the panel. You have an esteemed panel sitting here. So yeah, please.
I'm Shankari Murali. I'm Additional Controller General of Accounts in the Government of India. So just a very quick rejoinder to what he said. Definitely, as the 15th Finance Commission has recommended, we are looking at harmonization of accounts, and hopefully there should be some progress in that. But sir, my question is addressed to you. You let the cat among the pigeons, literally, but the issue which Mr. Vikas Gupta raised was a very significant one about the political participants in this entire governance system. So if they have no incentive, if there is no alignment of the political and economic incentives, there is always this kind of issue. So if you could.
Well, thank you for the first question from the audience. We had a little bit of a panel discussion in the audience. Everybody had a comment to make, but thank you for the first question. I appreciate that. And I'm not sure you're right. Politicians have exactly the same incentives as officials do, or stated intentions, which is that we want to serve the people, and we want to provide people the best facilities and services that we can provide them given our limited financial resources and our execution capacity. I think we are all on the same page. It's just that the technocratic solutions that are required to do that, given the constraints that we have, should really come from the technocrats. That's why bureaucrats are there. That's why they're trained. That's why they travel the world. We don't do any of that. We don't have time to sit and write white papers and go to conferences like this. So we cannot come up with solutions, but we absolutely want people who don't have access to trash collection, clean water, good roads, good retail zones, good recreational opportunities, stadiums. We want all that to get done. It's just that the people who need those services can't afford to pay them. But there is a way, if we can tap into these economic engines like a Gurgaon, like a Whitefield, where highly productive economic actors unleash value, then can we come up with the solutions where we capture some of that value and bring those services to people who want them but can't afford them? And that's the way economic growth has always worked. That's the virtuous growth cycle. And that's why finance has such an important role to play, where the high value add economic activities cross-subsidize those who are not able to engage for many reasons in those kinds of high value add economic activities. So just to give you an example, the average farmer in Jharkhand makes 6,000 rupees a month. The average farmer in Jharkhand makes 6,000 rupees a month. How is that person going to afford world-class services which Dr. Sreedevi was mentioning? It's not that he doesn't have a phone and he can't see what world-class services are like. He doesn't have to go to Dubai for that or London for that. He can see that in Gurgaon people have wonderful first world type services. He may even have visited Gurgaon, but he's at 6,000 rupees a month. How do we then give him a park? How do we give him a stadium? So we have to take those economic engines that are generating economic value, we capture that through some of these financing solutions and we transfer it. That's the breakthrough that we need. Can we incrementally keep doing what we are doing? Yes, of course. We are doing it right now. We are growing an economy at 6%. That's built into our economy with incremental thinking. But if we have to grow to 8%, if we have to help Hazaribagh and we have to help Warangal, not just Gurgaon, which is already plugged into the first world, we have to have breakthrough innovative thinking. That's what I'm trying to push you all into doing. How do we move from incrementalism? Much of what I'm hearing from the panel right now and from all of you is incrementalism. That's great. I'm not averse to it. By all means, let's think about getting the credit rating agencies to work better, our municipalities to be more efficient, to be able to get more parastatals up. We've got 10, let's do 11. But how do we take the Hazaribags of the world and give them world-class urban facilities and services? That's the 25 lakh crores that's not getting financed. If there's a 30 lakh crore demand out there right now, 5 lakh crores is Haryana, is Gurgaon and Hyderabad and Whitefield, and that's getting financed because they have the economic engines and they're self-contained and they're doing it. But then my whole point is, how do we get beyond that 5 lakh crores that is investable, that is bankable, that is financeable right now? Of course Gurgaon is bankable. There's so much value being created because we've taken that area, that geographic area, and plugged it into the first world economy, given it a fantastic airport, fantastic connectivity, wonderful facilities, urban facilities. Everybody in India who's a high productive person is flocking to a Whitefield or a Gurgaon and generating lots of economic value add. And by the way, that's driving Haryana and that's driving Telangana. What's driving Telangana is Hyderabad. What's driving Haryana is Gurgaon. So that is happening. Those economic engines are there. But we have to think beyond just that, because that's the 6% growth. We have to get to the 8% growth, for which we need innovative financing solutions. That's the point I'm trying to emphasize. But again, just to conclude on that, those solutions are not necessarily going to come from politicians, because that's not what we do.
Yeah, this is Sameer Bhatia. I am representing the World Bank. I think one aspect that we perhaps have not touched upon, and I want to just hear your view, especially from Telangana and from Haryana, is the project preparation part. The whole comprehensive planning around the projects, because I think maybe I'll put across.
What's the question, sir? What is your question?
The question is that
One-line question, please.
Yeah, the one-line question is project preparation, comprehensive planning for services, urban services, has to be improved. Then the finance can follow. I think that's the main point that I'm making. I'm seeing a gap there. That's the question.
So the question is what?
The question is, how do we improve the whole comprehensive planning at the urban city level for services?
Okay, good question. Let's ask our practitioners here.
Comprehensive planning for preparing for urban centers. Is there any such measures?
See, if I talk about Haryana, so Haryana has this practice of planning for the cities, although there are always challenges in the implementation of those plans. But one thing which I can say, that out of like Haryana, we have now 88 municipalities, and out of those 88 municipalities, we have plans, master plans or the development plans for more than around 80 towns. So their planning is there, but how much it is accurate or how much it is faulty, it's always a debatable point. And then the implementation of that plan. Again, we prepare a plan, we try to implement it, but there are always certain issues. And then again, implementation of that plan as per the needs of the people as well as the funds available. So yeah, we have that practice, and what you have seen in Haryana is Gurgaon, Faridabad or Panchkula, or to that extent Karnal, Hisar, Bhiwani, other towns also. So we have plans, we have implemented those. HSVP or Huda's sectors have come because of those plans only. But no doubt, there is requirement of improvement in that.
To add to the reply, there is, I don't agree that we do not have plans. When we mentioned that we have captured the aspirations of the people, it means that we had from the wards of the municipalities, and the requirements are mapped, and those requirements are again mapped into different sectors of services. Let it be road, or let it be drinking water, safe drinking water, or sanitation, or sewerage treatment, and likewise. So it is not right to say that there are no plans. That is where, and to prepare the plans and then go for finance is something which is, I think it's not a right thing to say at this juncture. Most of the states, I'm sure, have plans for their, in their urban sector.
We'll wrap up here. I'll hand over back to Namita.
Apologies to everyone who still wanted to ask some questions. We're actually running 5 minutes over time. And we have a very tight schedule because the next panel is waiting. So thank you so much. Thank you so much, sir. I think what Mr. Sinha very rightly said is that we need innovative solutions. And these innovative solutions have to come from this room. So rest assured, at Janaagraha, we are very committed to this agenda and will be taking this forward. Thank you so much, sir. Thank you. Thank you.